pattern recognition, and then we have trading with candlesticks. All are unrelated, except they're all using candlestick charts. Now, candlesticks are really a form of charting developed in the 17th century. So they've been around a very, very, very long time. And they came to the Western world much later. But candlesticks give us a lot of information. Each candlestick represents a data set of complete price action during a selected time frame. So in other words, if you're looking at a 1 hour candle on a 1 hour chart, that candlestick will represent the open, the high, the low, and the close in that 1 hour. If you're looking at a 1 day chart, it will give you the open, the high, the low, and the close for that 1 day. Now, lots of beginners think it's all about reds and greens, but it isn't. Lots of reds. Well, actually, let's pop up to a live chart and let's take a look. So lots of reds and greens don't really tell you anything. Too many traders. Let's get rid of my MACD down here. Too many traders think that when they see lots of red, they should be selling, and when they see lots of green, they should be buying. Can't be farther from the truth. Now, each candlestick gives us some information. Okay. Each candlestick represents the open, the high, the low, and the close. Now, to draw a candlestick on a chart, and I'm sorry, for some reason, the software tonight is giving a very slow response. So I'm drawing something, but I'm not seeing it really pop up on your charts. Hold on one second. Let's see if I can get this to go a little bit faster here. Okay, so at the beginning of a time period, you would draw a line across at the open. At the end of that time period, you'd draw a line across at the close. You would put a dot at the highest price that that asset reached and a dot at the lowest price that asset reached. We would connect the dots to the lines, and then we would connect the lines together. So this is called the body of the candle. These are called the wicks or the shadow of the candle. Now, if you notice on this chart, we could have really long bodies and we could have really long wicks, or we could have short little bodies with longer wicks. We could have short bodies with just one wick. We even have candles that have no wicks on them. Okay. All of this tells us something about what has happened in that time period. It doesn't tell us you want to buy or sell an asset. It's telling you who was in control of the markets at that time. So when we have a green body, we know that the buyers are in control. But that doesn't tell you the whole story. The wicks help us tell that story. Okay. Because see here, we had this very, very long body. It's red, so it tells us the sellers were in control. But at some point in that time period, the buyers dominated, pushing the market all the way up here. But for some reason, they petered out and couldn't control it. And the buyers, the sellers were able to pull the market back down to here and close here. And the reason we know this is because a red candle tells you the close was lower than the open. The wicks tell you what the high was. Now, granted, this wick could have shot up to here and then shot up to there and then shot up to there, all in that same time period. But it tells us at this point that the sellers are in control. It doesn't tell you to sell. It just tells you at that time frame, the sellers are in control. Okay. These bodies tell us something. The wicks tell us something. Then the placement of the candle in relationship to the previous candle and to the next candle can tell us a story. Now, there is such a thing with candlesticks called pattern recognition. That is memorizing when these three candles appear, I'm supposed to do something. So in other words, this pattern right here can be called three green, three white soldiers. These are when three green candles appear, each one higher than the previous. And there's a set of memorization rules. But you know what? Trading isn't about memorizing and doing what somebody wrote that has nothing to do with today's chart. Now, I've got to explain something to you. We have the open, the high, the low, and the close. If the market stepped up from the open to the close, we would today draw this in, fill this in with green, and call this a green candle. If the market declined and the open was here and the close was down here, that means we stepped down the ladder. That would be considered a bullish candle. And today we would fill that in with red. But years ago, before we had computerized charts, and we would sit in the pits and hand chart, and that's what I did when I was trading in the 70s, and the markets moved a lot slower. But we were sitting there with graph paper and using our pencils and keeping track of our few assets while, through the ticker tape and drawing our charts so that we could make decisions. We didn't have magic markers. We didn't have colored, what do we call these markers today? We all use them. We have tons of colored markers. We shouldn't have computers. So in those days, instead of filling in this candle with green, we would just leave it empty. This became called the white candle. If it was a bearish session, we would use the side of our pencil and we would fill in the body, and that would be the side of a black pencil, and that was called a black candle. So in those days, we had black candles and white candles. And the reason this is important to you is a lot of the things you'll read about candles talk about black and white candles. Because we don't change the names of the candlesticks. I don't know why the software is so slow tonight. There we go. Okay. So technically, reds and greens have nothing to do with the candlesticks at all. It's today's market has set them reds and greens. But the fact is, if we wanted to use blue and yellow, blue and yellow, we could. As long as you know what color you're using for bullish and what color you're using for bearish, it doesn't make a difference. There's a lot of Forex and CFD companies out there that actually use their company colors for their candlesticks. It defaults. You can change them because you're allowed to change all the settings you want, but they default to some. I've seen candles with gold and blue for a brand that has gold and blue. I've seen them with bronze and black for. Okay, it's just the default colors. You can go back and change them all you want, and most of us today have gotten used to using reds and greens. I mean, I would be completely lost looking at a candlestick chart, but if you wanted to use pink and purple, as long as you know which is bullish and which is bearish, it's perfectly fine. Okay. Now, once you've got your candles on a chart, once you can read the story of the candle, what the individual candle's telling you, and this is the most current candle right here. This is a live chart. So we have that candle. What does that candle tell us? We see two bullish candles, and then we see a smaller body red candle. Well, what is it actually trying to tell us? Well, it doesn't tell us anything by itself. But when we look at candles, we need to look at its relationship to the previous candles, its relationship to the trend, and where it currently sits to try to interpret what it is trying to tell us. Now here we've got a nice uptrend. Okay. So this candle on the whole isn't really trying to tell us that. Traders pushed up the asset, pushed up the asset, pushed up the asset. They took a breather. You know, the guys who got in down here sold and took some profit. Some of the guys who got that. And so the next candle will be strategically important. But we noticed the wick didn't come lower than the previous open. Okay. And when it fell, it didn't fall lower than this previous candle. So it's all right. Now we have things that are called bullish engulfing, bearish engulfing. Well, we'll go look at them. And they have specific patterns we're looking for that try to tell us something about that, not what to trade. But candlesticks can be used in our price action interpretation to actually make very good trades. So let's go back to my PowerPoint. So we've talked about what a candle is made up of. Okay. And we talked about the shadows and the wicks. We talked about what it, you know, that it's showing you bearish and bullish. And basically, a bar chart and a candlestick chart have the same pieces of information. Let me pump back over to a live chart again. Come on, come on, come on. Now, this is a candlestick. If you notice, I can go over to a bar chart. And it's the same exact piece of information. I don't know why the system is taking very, very, very long. Very, very slow tonight. I don't know why. Okay. And a bar gives us the same exact information as a candle: the open, the high, the low, and the close. Candlestick just gives us a better visual representation. Now, today's charts, which are so advanced, gave us too many choices, but we could, and some bar charts are today doing this, which I don't understand why, but they're using red and green bars, which then make them almost just like candlesticks. But I like my bars black. That's how I learned to trade. And to be honest with you, too much red and green confused my eye. But a candlestick and a bar chart, are, all charts have the same information because there's only 4 pieces of information you have. Is open, high, low, and close. Now, today, our advanced Java charts and HTML charts allow us to flip them back and forth, all right and left, because a lot of times I'll use my bar charts to draw my trend lines and to find my support and resistance levels because I can see them clearer. And then I just convert my chart back to my candlestick chart. Now, so we understand the basics of the candles. We understand the difference between a candlestick and a bar chart. We've talked about what the size and the shape of the candle tell you, who's in control of the markets. You know, when you see a very small body, that tells us there's indecision in the market. The buyers nor the sellers are in control. The wicks give us a little bit of a story. Come on. Well, while I'm waiting for the page to catch up, there we go. So keep in mind, though, that Invest Markets is still offering that 100% bonus. So sign up today and claim that bonus. Now, let's talk about understanding candlesticks. Before turning to single and multiple candlestick patterns, there are a few general guidelines I need to cover. Now, we've talked about them. And now that you have the basic idea of what candlesticks indicate with their bodies and their wicks, let's cut our teeth on some simple and uncomplicated candlestick patterns. They are quite common and will quite likely appear before you in normal trading sessions. And these are things like dojis and haramis. Okay. Dojis and haramis are single candlestick patterns. They use just one candlestick. Okay. We have shooting stars, we inverted hammers. Okay. Now you can decide you want to memorize them, and there are actually 32 primary patterns of candlesticks, 16 that are important. But we have bullish hammers, bullish bell, engulfing. Okay, but to be memorizing them is not worth it. Some of the more popular ones, like doji. Okay, a doji appears all the time. What is a doji? It's when the body of the candle is it used to be that it was non-existent, that the open and the close were exactly the same. Okay, today, because we're trading in CFDs and Forex, which we're using 4 digits to the right, because we've gotten so finite that the doji can have a small difference between the open and the close. But they appear quite often in our trading sessions. But anytime you see a candle with virtually no body, that's called a doji. We also have marabuzus. Okay. A marabuzu has no wicks. So if you see a white or a green marabuzu, that means that the price opened and ran completely and closed at the very top of the trading session. So that tells you the bulls are very much in control and they should continue running the next candle. The exact opposite happens in a red candle. It tells you the bears opened from and maintained and pushed that price down from the very beginning. And that's why there's no high and that's why there's no low. And they closed that session at the lowest point. So they were still pushing. What happened was time ran out for that session. So these are 2 patterns you'll hear about quite often, but they don't really tell us anything for our trading. Okay. And what you're looking at are the most current pattern. But you see, what do they try to tell you is when you see a bullish harami, it's a reversal indicated by a small body of the opposite color entirely contained in the body of the previous. Okay. This is what it is, but then they want to give you rules about how to trade it. And that is trading pattern recognition, which is a very bad thing to do. You'll lose your investment in no time flat. But in our daily trading, we should see things like bullish and bearish engulfing. They tell you something about the markets and the trend. They don't tell you what to trade, but a bullish or bearish engulfing, because remember, there's something in each direction, okay, is when the current candle fully engulfs the previous candle. So as you see here, you had a red candle. Okay, I'm waiting for the screens to catch up to you again. We had a red candle, and then our next candle, our green candle, fully engulfed that previous candle. That's called, so when you have the reversal color and fully engulfs it, it's telling you something about the current trend. And it only tells you if it's coming off of an uptrend or a downtrend. And really what it's telling you is that trend is in trouble. A lot of people tell you then you should be buying, but it doesn't. It just tells you the current trend is in trouble. And then we have things like Morningstar, but memorizing them all is quite annoying, waste of time. And you should be aware of some of them, But again, it's too time consuming to sit there and memorize all of these charts. And you could spend your entire time trying to look for patterns. Now, it happens to be our new computerized charts. There we go. Allows you to just tell the charts to mark them. So if you notice, I clicked on bullish engulfing, bearish engulfing dojis, and now the computer, I don't have to look for them. The computer's spotting them for me. So here you can see we had a doji, but we also had a bearish engulfing candle, okay, a bullish engulfing. And today's computers will also allow you just to put your mouse on it, and it'll tell you everything you need to know about it. So, are you smarter and better than trading a computer? Trading isn't about what a computer sees. A computer is a tool that gives you information. Okay. And candlesticks aren't right all the time. You have to be able to then place them in relationship to what is happening on your charts. So even though today's modern technology gives us lots of advantage, and you can put whatever candlesticks you want to put on your chart, all of these are known candlesticks patterns. And if you want to put on an evening star and morning star, 3 falling method, whatever you want to put on, if you think hammers are important, you want them on your charts, just click on there and it'll drop it on your charts. So what have we talked about? We've talked about what a candlestick is made up of, what it tells you. We've talked about the difference between red and green. We've talked about the bodies and the wicks. We've talked about what an individual candle tells you. We've talked about what the patterns try to tell you. We've talked about how to put them on your charts. We've covered a lot of subject. Now, I can't teach you all in one night. Okay. You'll remember some of this stuff. You won't remember some of this stuff. Some of the stuff you need to learn in more detail. But candlesticks are only part of your candlesticks. Do not give you a trading system. They don't give you a trading strategy. They are used in part of your strategy. They're used for you to interpret what the market's telling you. So you can use the wicks to determine stop losses. You can use a group of candles. You can see your own pattern. You can use them any which way you want. But you have to start learning how to see what the market is trying to tell you when you look at the chart with candlesticks on there. You know, I mentioned we have things like 3 white soldiers. Okay, we have 3 red crows. Okay, memorizing when you see them what you're supposed to do. Okay, doesn't help you. But now it's time to move into action. Now, when you've gone through the various candlestick patterns, you're either ready to go out trading the battlefield with your newly acquired knowledge, or you want to stop and shout, "Stop it. I'm too confused with all these funny names and shapes and can't remember any of these." And that's really true. Let me tell you, most of them I don't remember. I don't remember their names. I hear their names. I don't know what they are. I can't tell you off the top of my head what an evening star is, what a morning star is. But when I see them appear on my charts, I see them not because of the name. I see them because I'm seeing a relationship. Now, each candle on a candlestick chart is a reflection of the market sentiment. It's not just a standard pattern, but with a keen observation, you can master the art of trading by looking at the chart without even remembering the names of these patterns. But you always want to be aware of what is the current trend. Okay. Any of these patterns, anything that appear, you cannot take it out of context. You have to look at it in relationship to the current trend, the current market. You need to look at volume. You need to be able to tell what is happening and what is a doji that appears at a support or resistance level is much more important than a doji, because dojis appear all the time. But it also, if it appears after a strong move upward, several candles moving upward, and then a doji appears right on a resistance level and it's the opposite color, it becomes a lot more important. But I can't write all that down and tell it to you. But when you see it, you say, ah, now what do you expect to see? You don't know, but you know something's afoot. So each candle on the chart reflects the market sentiment. Each candle on the chart may be saying something to you, and how do you listen to it? The answer to that lies in the size of the bodies of the candles and its wicks. The length of the candle body gives you an indication of buying or selling pressure. Okay. But you have to look at it in connection with their wicks. Okay. Like I said, a doji tells you market confusion. Okay. Now, that confusion also helps us interpret, or with the looking at the wicks, can help you define that story. So candlestick patterns along with chart patterns indicate outcomes that will reveal the will of the crowd. They point to time and direction because herd behavior drives a common will at key market intersections. Patterns lose their effectiveness when the crowd finally catches up to the prevailing market theme. Bullish candle patterns and bearish candlestick patterns provide a kind of interpretation of trader psychology. Perfect patterns rarely appear in the modern market environment. So learn to execute comfortably in a debris-filled landscape. Understand how to correctly interpret and utilize Japanese candlestick patterns will help navigate your decision-making in murky waters. It's the trader's responsibility to formulate tactics that capitalize on a setup if it unfolds and to protect the trading account if it fails. So remember, no matter what candlesticks are telling you, never take a trade you don't understand, and don't ever take a trade without calculating risk reward ratios, and don't ever make a trade without setting a risk or stop loss. Traders following candlestick charting are at a distinct advantage here. They realize that the stop loss point is a function of the candlestick's buy and sell signal itself. The percentage below or above the buy and sell point has no meaning to these traders. Once a high probability profit scenario is found and a buy point defined, the obvious question to ask is, at what point does the buy signal get negated? That is the point of the stop loss limit. Whatever trading timescale you work up on, candlesticks can be incredibly powerful tools. Now, there is something I neglected to show you, and let me go back to the live chart because it's kind of important for you. Okay. Now, remember I mentioned to you, see this very long candle here. I'm just using it because it's a huge candle. Okay. We also had that huge push all the way up in that high and that little wick down here in the low. This is a 1 hour candle. This took place in 1 hour. Now, you can interpret what the market's doing. And you could have said, well, maybe it pushed up a little bit here and then it fell down, pushed up, by changing your time frames. Because remember, this covers a 1 hour period of time. By using multiple time frames and dropping this down to a half hour, well, here's actually what happened in that full hour of trading. So we see in that full hour, in the first hour, the bulls were in complete control of the market. They pushed price all the way up here where I understand closed here. But look what happened. The bulls had no power in the next half hour. They were able to push up and then they died. They fell all the way down to here and closed down to here. So we know that the bulls tried to mount or tried to continue this upward movement. Something, we don't know what it was. Because look, as soon as it fell back down here, it started to climb back up. But now when we look at it, look at where it's climbed. It's climbed just to where those close and open were. We're not really at that wick yet, but that tells us something. Now, if we want to break down more what happened, we can go to a smaller time scale and look at it in a 15-minute chart. And then we get 4 candles that more precisely tell us exactly what happened in that time segment. Okay. Sorry, let's go back and circle it. So it was at 18, a little bit after 1800. This is 1830. Okay, so now you see the 4 candles that would have made up that 1 hour session. So this tells us a little bit more about it. First 15 minutes, next 15 minutes. So then the bulls petered out. The bears were able to take a little bit of control here, only because the bears pushed it up so high. But here's where the selling pressure really came in and then continued down here. But then it completely died out and it's recovered. But it's taken a long time to recover that price. So using candlesticks in multiple time frames can help you interpret what is actually taking place in the markets. Okay. Also using candlesticks in different strategies. Okay. Here's using our candlesticks to look at bottoms and tops when we're looking at flags and pennants. Here's using candlesticks to see a breakout of a triangle. Again here. So there's many ways that we can use candlesticks. Here's our indecision candle strategy. And this is when an indecision candle appears. An indecision candle is a doji on an area of support and resistance. And what are we looking for? Okay, now it's either going to gather momentum and continue the trend, or it's going to reverse at that point. But an indecision candle falling directly on a line of resistance becomes very, very important. Okay, and so there's many ways we can use our candles, okay, in our trading decisions and our trading strategies. So whatever trading timescale you work on, candlesticks can be an incredibly powerful trading tool to help us to judge what's coming at us from the right of our trading screens. Now, in this webinar series, I've only scathed the surface of candlestick charting, and there's a lot more to learn going along the way, but you've got to absorb and practice what we talked about tonight and start feeling it on your charts and understanding it and seeing it and interpreting before you can just move on. Remember, trading is about experience, education, risk management, more experience, more education, more risk management. And it's trial and error, trial and error. Don't risk your money. Make sure you manage your risk at all times. So thank you very much for joining us tonight. Have a great trading week. Bye now.